is DeFi headed towards becoming TradFi on chain? Like, is that the end state? And if so, what does it mean for things without like any PE or intrinsic value?
Yeah, I mean, I think that we're going to see more and more of it. I mean, I do think that like there is this, like trustless nature of it that like will never quite, it'll never quite be the same as traditional finance. It seems like in a lot of ways we're like recreating traditional finance. But I think that there will, like you're showing Hyperliquid right now. This is like a perfect example of it. This is a unregistered exchange that does not like require KYC, and is incredibly popular because it's like providing the service that like a lot of people, need, wants, maybe can't access in other venues. And so I think
welcome to today's episode of
Numbers
the
are up.
DojoPod.
I'm happy.
Pain, max pain, a lot of pain, tons of pain, I would say. The question I think I want to try to answer today, possible or not, is are we in a bear market, and what would indicate whether or not that is the case? So, I mean, first we need to understand what a bear market is. Do either of you guys have like operating definitions that you guys use or for yourself? I'll take that as a yes.
Well, I mean, you can look at the like technical definitions of a bear market, and which usually have to do with how far down something has dropped. Now, I don't know if those really are as relevant in crypto because things are super volatile and drop all the time. A lot of people use things related to like the EMA. That's certainly another factor. But yeah, I mean, my gut is it's not necessarily just a bear market. I don't know if you saw the Atlanta Fed's revised GDP forecast, where they're now forecasting GDP shrinks by nearly 3% in Q1.
We're heading into a recession.
Yeah, well, that was half serious, half shit post. But basically that was because the Atlanta Fed revised their GDP forecasts to be from growth to being down almost 3% for this quarter. And the definition of a recession is 2 quarters in a row of GDP shrinking. So if they're correct for this quarter and then we shrink next quarter, then we would be in a recession. And yeah, so I was kind of meant like we're not just in a bear market. Like it's not like, oh, this is the normal crypto cycle. I was saying we may actually be entering a recession, and in that case could be a very different situation that people in crypto are used to.
Me and one of our other moderators looked at this because he was saying like, just go into SPY because like it's up only ever. And I was saying, well, no, equities have had decades of flatness or like bearish activity. Now, SPY maybe is a bit exceptional, but it's also newer. But if you look at, what's the other one, the Dow Jones, historically, like there have been multi-decade long periods where it is either flat or down. If we do go into recession, do you anticipate that it'll be like uncharted territory for this generation?
If I could forecast that, I wouldn't be here right now.
So you've had a few recessions previously, right? And
what's that?
We've had a few recessions in our own lifetime.
Yes.
I think 2008 recession is a prime example. And everything went down, but then like quantitative easing kicked in and everyone was having a great time after that.
Yeah. I mean, the thing that people do need to recognize is, I mean, in general, the economy grows in the long run for a variety of reasons. But if you look, for example, at certain timeframes, like say the NASDAQ peaking in, do either of you know, was it 2001 or 2000? Whenever it peaked, whenever the exact year it peaked in the dot-com bubble, it took like a decade to reach those highs again. So, there's plenty of times when the world doesn't move at the pace of crypto. Same thing with the S&P 500. There was a period for much of the 2000s. That doesn't mean it's going down the whole time, right? Because it has to bottom and then start going up again. But even look at some of the big tech companies from the dot-com bubble, like Amazon. Amazon was like in 2000, and it took how long? 8-9 years to hit its all-time high again.
We're also, in this interesting phase where it's not just the crypto markets, right? It's these like high growth tech stocks that have also been feeling quite a bit of pain. I think Nvidia is down something like 27%. Bitcoin's like 25, Tesla's like 40% down, right? So it is interesting to kind of like ignoring altcoins for a second, it is interesting to see kind of like this correlation between Bitcoin and these like high growth tech stocks. It's been talked a lot, on the way up, and we're actually seeing in some cases Bitcoin outperforming on the way down as well, which is, pretty interesting to see. There's been a ton of news.
Still above
Okay.
the last cycle. So I was going to say, just piggybacking off what you're saying, Bitcoin is still above its last cycle all-time high. ETH never hit its last cycle all-time high. I don't know what this means, though we've had some speculation in the dojo, which is like ETH as a store of value, that thesis goes away. And the incoming thesis is that ETH as a chain, phenomenal. It will be the rails of finance, like no problem there. But ETH itself only needs to be worth like $10. There's no reason for it to hold value. It's not a store of value. Bitcoin has shown that it kind of is a store of value. It's, it's not inflationary. There's a fixed supply. There's obviously demand for it, and it's highly secure. So I don't know. That was like the very, very TLDR version of the conversation. It terrifies me because I'm a ETH holder, certainly. It's interesting that like out of all of the top 5 coins, I think all of them except for ETH hit new all-time high this cycle. So we picked the exact wrong one for most DeFi users, but we got airdrops along the way. I think that was kind of nice, but it's frustrating, certainly, to be an ETH holder in this market. Do either of you have an idea of why this has been the case? Like, is this the end for ETH? Is one of the questions here. And what does that imply for like POS coins? I like that face, Patrick. We're gonna go. So you either have something spicy to say or had some spicy food yesterday?
No, I'm not going to say anything too spicy because I don't want to, kick people while they're already not feeling great about things. I mean, to be fair, you guys know that I talk about Solana a lot, and that's down tremendously as well. Although that did, smash its all-time high, and people who were in that ecosystem did extremely well. I mean, I think the thing with ETH not hitting its all-time high is basically that this cycle ended up largely revolving around like meme coins, and most of that activity did not take place in the Ethereum ecosystem. So there wasn't as much of a reason for people to hold ETH. Now, I think you said ETH is no longer a store of value. To me, the possibility that ETH would replace Bitcoin as store of value, there was the ultrasound money narrative. To me, that possibility basically died when Bitcoin ETFs started getting significant adoption, because that basically said, okay, the traditional finance world has selected Bitcoin, or Bitcoin has won that narrative. Now, I still think ETH is powerful as like you said, rails for finance. It's still powerful as a smart contract chain, and that inherently has value in the same way that a major tech stock has value, right? But you wouldn't say that Meta is a store of value. Meta is more valuable than a lot of store values, right? But you wouldn't say like Meta is a store of value. It's just a different type of asset. Or, here's another example. You might say there's lots of commodities you wouldn't say are stores of value, because Ethereum is not really a tech stock. It's like a commodity. So you wouldn't say that, trying to think of like rare earth metals. Some people might, but like generally those are not thought of as stores of value, right? They're very valuable still, but they're not stores of value.
Gold is a store of value. Gold's a rare earth metal.
Well, rare earth metals, I'm speaking of the category of
Cobalt that are
just palladiums, those things, uraniums.
No, it's a specific. I can get you the list.
Okay.
They're
like scan.
Patrick, if it's not tokenized, Steven doesn't know about it. So
like
once they
like neodymium, europium, holmium, thulium, like they're legitimately like very rare, but they're crucial to electronics.
And is the reason why they're not store of value because the tech changes so rapidly that by the time that you've purchased enough and accumulated enough, probably there is a new replacement metal for whatever the tech needs.
Well, again, they're valuable, but they're not used as a store value. Their value comes from the fact that they're used in electronics rather than the fact that people...
So it's about utility.
Yeah.
Okay. Value from utility versus value by scarcity. I think what the main argument for gold as a store of value is that like there's this theory that there's effectively like a layer of gold around the world that anyone anywhere can access through mining. I mean, it's not exactly true, but like gold is dispersed somewhat evenly throughout the world, or was at some point in time, and the amount of effort it took to get that gold was a good indicator of the value of that gold. And then, of course, like scarcity demand and then actual utility added a premium to that value.
Yeah, well, gold is also a store of value because it's not water soluble, so it doesn't corrode over time, and it's been accepted as a store of value for 10,000 years.
Well, yeah, I mean, certainly that helps. There was I don't know, you didn't get to go to that talk, but at ETH Denver, we should talk about that. Not our takeaways. Apparently, people hate those, so we won't talk about that. We'll talk about the things that we didn't take away. There is a new chain, like Quai. I don't know if you've heard of this, Quai or Chi or something. Yeah. Yeah, have you heard of this?
Yeah, I heard about that as they had some kind of like test net or some or social program people were trying to airdrop farm a year or two ago.
Oh, okay. So, but like the basic idea is they're trying to tokenize the value of energy. So like the value of either Chi or Quai is roughly equivalent to like hash rate. So the harder and the more energy it takes to mine the thing, like that's how valuable the thing is going to be. And like they go off of this assumption that value comes from difficulty, or value comes from like energy required to access a thing or an asset. It will say it sounds like an algo stable, which terrifies me, but they have some big backers behind it, like the guy from Wolfram Alpha, Mr. Dr. Wolfram, I forget his first name. He is one of their core advisors. He has a long video of them talking together, trying to understand the entire thing. So it's neat, but yeah, I mean, it goes back to like, well, why is a thing valuable? And for ETH, like, is it in a, okay, so let's just say it's not a store of value, right? It doesn't fit the mold for store of value. Is it an investable asset is like the next thing, right? Why are stocks investable? Typically because there's some sort of PE ratio or some expectation of profit, right? At some meaningful time. If the proof of stake narrative falters, which is this is infrastructure and these coins run the infrastructure, but are not a representation of a functional governance mechanism, then I think we're in scary territory.
I think also one thing I would say is like store of value in what context, right? I think ETH is still likely the store of value in the DeFi world, right? Like what is the most liquid pair? What is the thing that most things are paired against in DeFi? It's ETH. What is the most, used asset, things people are getting yield on? That's still probably ETH. But there is this broader question of like store of value outside of like the DeFi world or the on-chain economy or whatever mimetic, phrase we want to like throw at that thing.
There, right?
There is. Well, BTC is becoming, there's a lot more BTC-fi that's happening, right? And so I think that, I'm not sure that's like the reason why ETH is underperformed, but like I think it is, ETH is still the digital store of assets in DeFi. I think that's still true, but it's lost the case of being this like broader store of assets or store of value, I think. Right. And then even in the DeFi side, it's getting a little bit wonkier. I will say though, if you just go and measure like from the highs to the current price for both ETH and Sol, I think that they're about the same. Like that, ETH definitely did not get a new all-time high. So if you go from there to Sol, that's 54-ish%.
Yeah.
Yep. And where are we at right now with ETH?
From its all-time high or from its...
No, from this cycle high. Yeah.
Okay. 57%. So it not only did not hit a new all-time high, it's also lower relative to its cycle top.
Is it? What cycle top you're going off of?
This one back in... Oh, sorry. This is weekly. Is that back in 2020? Yeah. Sorry.
Yeah. So if you go from this cycle, yeah.
This cycle, that would be March 24th. That seems reasonable. Oh, only 49%. We're kicking so butt. That's great. This is so back.
No, I mean, but it is interesting, right? Like, didn't reclaim a new high. Like, very, very painful, but also has had a bit less downside. I wonder if that's things like having a structural difference, like having an ETF, right? We are going to have like the staking ETF come out soon. Who knows if any of these things actually make a difference? I mean, they are stories that people can kind of like hold on to. I think there's also like the whole, regulatory side of this and like the Trump side of like crypto that like is worthwhile talking about. I saw this great tweet from Ari Feldman who said something like Trump is the genie where you like ask him for a wish and you don't get quite exactly what you want. It's like, like we asked for crypto to have like a favorable administration and less regulation. And now we're like, ooh, wait, is that really what we wanted? Like we wanted the wish slightly different, right? We wanted like, a different interpretation from the genie of that thing. And it is, we did have, obviously, like I'm sure people are familiar with this, but we did have this like tweet that pumped the market 20% just a couple of days ago, which was that Trump is suggesting this strategic reserve not just of Bitcoin now, but of also including ETH and Sol and ADA and XRP. Right.
I loved that tweet, by the way, the genie thing. I thought that was like, honestly, I had never thought of it that way, but I saw that and I was like, that is so insightful, because that is what it feels like with some of the crypto stuff. It's like, wait, not like this. That's not, that's not the way we wanted it.
Yeah, exactly. So I don't know. I mean, we're maybe we're going into a recession. maybe Patrick's right. Certainly risk on assets like crypto and high growth tech stocks seem like they're, not enjoying the current economic situation of uncertainty and tariffs and a lot of the other things going on. We still have, a very positive administration talking about buying altcoins for strategic reserve, who seems to be dropping the lawsuits on all the kind of quote unquote good actors in the space, the Coinbases, the Consensus, the Uniswaps, and other kind of like potentially positive catalysts like stablecoin bills and stuff like that. So, I don't think crypto can fight kind of like the broader economic trend of what's happening, and maybe that is a recession. But I do think the long-term trend for crypto is still up. I'm not like super doom and gloom of like crypto might be over kind of thing, but I do think we have crypto and the economy in general has a lot of uncertainty ahead of us. And I think that kind of fits with something we've been saying for a while, which is like find ways of getting long volatility, because it has certainly been volatile, even just between Sunday and Monday. If you just want to like pull up that chart, like the daily chart for ETH, Steven.
The VIX, isn't that the volatility index?
Or just like the ETH chart for like daily. So if you just go to daily instead of monthly and you look at like Sunday, like it was like straight up and then straight down and now even lower, right? So like
the terrifying thing is like this is a beautiful case study, like bull trap. This is exactly what a bull trap looks like. And it's not good to have bull traps because typically that means we're more bearish than we are bullish.
Yeah. So yeah, I mean, it's certainly painful out there. I'm curious to, if you want to show us the volatility index.
I mean, I don't know if this is an investable chart. I'm not like a chart guy, but like that just looks like it's. I think VIX is typically used for a hedge. If you think there's going to be volatility ahead, you would like enter VIX to hedge against that, and then you wouldn't like. This is not a long-term investable asset. Is that the way you guys typically interpret it? And by the way, don't feel like you need to talk macro or random hedge assets if you don't want to. But yeah, I mean, definitely up in. Oh, this is weekly. Yeah, let's go daily. Yeah. I mean, so I don't know if we're in a bear market. The indicators say that we are. I know my TA lads. I'm not a technical analyst by any stretch of the imagination, but my TA lads like try to teach me as if I'm a toddler, and they typically say moving averages, like what I think Patrick mentioned earlier, which is on the larger time frame. If the 8 moving average goes below the 21 moving average, it is an indicator that we're typically like in more bearish conditions. And the longer the time frame, the more robust the indicator. However, unfortunately, if you use a monthly time frame, it's almost always way too late by the time you see those crosses. Like you're already deep in the trenches and probably at the bottom of the bear market. These are loading. They're slow today because of Murphy's Law. But on the weekly, still, people would say this is still like not a terrible thing for Bitcoin. We might have a chance to pop back up, but of course, ETH, like we're deep in the doom and gloom trenches on the weekly, and then I can't see the monthly because TradingView is refusing to load. On the flip side of this, so what I was talking about dilution earlier was that, like, yes, Bitcoin. We've talked about Bitcoin, BTC-Fi, maybe making it harder to see ETH as like an investable yield asset, but what I think is obviously the burgeoning narrative is like we are getting real world adoption in crypto, but it's coming in the form of RWAs, and RWAs are like people getting yield on their dollar. And if that becomes the new narrative, I think people just see ETH as a means to an end and not non-investable. So like, I mean, I'm getting a little bit extreme here because bags are all down, and certainly maybe a bit too emotional over bags being down. But the point is like people are going to be eager to go out and, do their ondos, do their reservoirs, their resolves, their maples, all of these things, all these different opportunities to get between like 8 and 12 of base rate APR on a stablecoin, and then play with these things as a new Lego blocks versus governance tokens as the Lego blocks. I think governance tokens as the de facto Lego blocks died last cycle, and we haven't seen a lot of adoption this cycle. For example, people LPing governance tokens is like the only thing that people have been doing. They haven't been wrapping, staking, like doing things with the exception of ETH. And I think even ETH is going to be having a hard time doing it again next cycle.
Right. I mean, you can see it with the restaking narrative, right? Like that was...
People are restaking stablecoins now for economic stability, for economic security.
Yeah. I mean, and Bitcoin. I mean, Bitcoin's a big one as well, right? Like it all started with ETH and Eigenlayer, and we had at the peak, I think there was like $12 billion of ETH restaked in Eigenlayer, and then we've seen, first of all, like a lot of dilution in that space with Symbiotic and Babylon and Kernel and Karak and Milky Way and Jito and all these other kind of restaking platforms. But also, there's been more what's called generalized restaking. So it's not just the ETH, it's the stablecoins, it's the BTC. In some cases, it's also like the governance token, right? Like staked ENA has been a big one as well. But the thing we have seen not very much of is actual demand. There's a lot of demand to restake and to get yield on the assets. I don't think there's been really any shown, interest or demand for like buying that, restaked economic value. I mean, like maybe there's a few AVS type things that are live on Solana that are paying some sort of yield. So I think like, restaked to Jito. But like outside of that, I don't think I can think of a single example of like restaked assets being used by anyone except for like the platform that is restaking on. Like Eigenlayer still pays programmatic rewards, but I don't think anyone's like actually paying for rented ETH on Eigenlayer or other assets on Eigenlayer. So I don't know where that whole sector and narrative goes, but like, that was supposed to be, I feel like one of the hot metas for this cycle for ETH. And that one feels like it's fallen pretty flat in his face, unfortunately.
I think at the end of the day, we'll end up getting a few bips out of it, right? And it's not going to be anything crazy. Like we're not going to see that 2 to 3 additional % on staking ETH. And even if we did, interest, like the interest rate to borrow ETH would normalize against that. So, but I do think we'll still get some bips out of it. I think there is some level of demand for like someone like the modularity thesis. There's so many blockchains right now. There's like effectively 100 different ones and then, infinite additional L2s. And people being able to just say, hey, I want to get data availability, or I want to use, this particular language, or I need this thing. What's the other thing that L2s do? It's not called validating. It's
sequencing.
There we go. Like sequencing. That's another AVS. All of these things are services that people probably don't have the ability to build. And if we do see adoption from companies, Sony making their own chain, if any other companies start making their own chain, I think that like the modularity thesis will make a comeback, and there might be some tiny little itsy bitsy fractional degree of revenue that comes from that gets passed down to restaking in some meaningful way.
Kind of like the revenue passed down from Coinbase to ETH mainnet type of thing for Base. No, I'm kidding. I mean, like that's kind of also been the meme, right? That it's like, there's a lot of extraction happening. There's a lot of people building on top of things, but not a lot of like.
We're at 2140. Let's go. Let's look at the minute chart.
Maybe that's what we need to get back to. We need to have you doing leverage longs or shorts again so that we can,
So back, guys. Look at this chart. Patrick, look.
Wait, what is that?
It's ETH. We're so back. This is the minute chart.
Oh, it's the minute chart. Oh, nice. Was there news?
Yeah. Hey, sometimes you just gotta see, if you're losing money, just adjust your time frame. It'll look, there we go. Look at this. So back.
It's like a whole 6 minutes of up only action right there.
Yeah, what's going on there? I'm thinking I liked that format we did a few weeks ago where we had the leverage position going during the recording. I thought that was kind of it was like a fun way to add some engagement. I might start doing live streams and do that just throughout the thing.
You should, yeah. Like say today I'm feeling this way. Let's see how the thesis goes throughout it.
Wait, so can you change the screen? It's over now, man. We can't watch this go all the way back down again. It's too painful.
Ooh, but here's an idea. Do the leverage position, and if it pays out, you're gonna give it to one random viewer.
Hey, Eric, that's good. And if it doesn't, we pick one random viewer to pay us.
Yes, we set an invoice for one random viewer.
Bit of roulette. We could, you know what? I like this idea. I'll have to set up a Solana wallet specifically for this, because actually we could talk about like which is the best place to leverage. Okay, wait. But there was something that you were saying, Mara, that I found interesting, but now I forgot. I've lost the track of it. Oh, it was restaking. No?
Yeah, well, I mean, I guess like the next logical thing is like, well, what do we do? I mean, I'm going to put you on the spot here for a second, Steven,
Yep.
But like, you've been uncharacteristically long for quite a while, like very publicly, long BTC, long ETH. We have a good friend who likes to pop up and ask us like, what is our signal for changing our strategy? And I'm just curious if you have seen that signal. I mean, we've been talking about all these indicators. The EMAs look bad. The stock market looks bad. Maybe there's a recession going on. There's all this stuff. Has that shifted your perception? Or are you going to shift and go less long, neutral, short, or where are you kind of thinking?
Yeah, it's a great question. So typically I'm also like an EMA guy who I used it last cycle, did pretty well. Also, I tend just to listen to what Groot says in the dojo or what there's a couple of TA people that I actually listen to and I like, and I feel like they're relatively unemotional, and they don't have like any sponsorship deals. So literally TA is the only thing they do. So if they're wrong too many times, they lose their entire business model. So there are a few, and I think all of them are out at this point. And so if I was not sort of stuck in my positions, I would probably also be out. But when would I have been out? I don't know. I think Groot called it a couple weeks ago, which is, it still would have been pretty rough and pretty painful, pretty far down from the top. And I will say that I am eager to get back to delta neutral positions. It is so much less stressful. I mean, just remarkably. There have been so many memes now of like, the wife or the girlfriend or the partner, like, babe, when will you like stop being moody? Or when will you stop staring at the screen? Or when will you stop? There is like an emotional premium that I think a lot of us are paying to be long or to be exposed to the directionality of the market that I am no longer interested in paying. And one of the things, so I will give a takeaway from Denver. One of the things that I took away from that was, speaking to a number of different hedge funds there and like larger capital allocators. I mean, they're really, you take that what you will. The sentiment was that, one, you never use leverage for anything but hedging. I thought like that was fascinating. They said like there is no positive EV. It is always negative EV to directionally leverage. And that reminded me of what Patrick said, which is like, if you have to ask why you should be leveraging, you probably shouldn't be. So that's what they were saying. And it hit me hard because certainly I've done some directional leveraging and it did well, but now I'm getting burnt by it. And so I think that is going to be one of my theses going into the next cycle, or like ending this cycle, is using it to hedge only. I think Mara, you learned that lesson at some point in time because you don't directionally leverage, but also running a long short book, hedging always. Like never trying to time the market, just stay in it for a long enough time and extract the inefficiencies of DeFi is what a lot of the most successful hedge funds in this space have been doing. And so that was kind of eye-opening, especially at size. They're not just like eating things and making index of longs and this and the other thing. They're just saying there are so many efficiencies versus TradFi. We are closing those inefficiencies and doing it at size in a way that our investors are super happy with, and we have very little directional exposure.
Yeah, I think that's spot on. I mean, it's easy to say these things now. Like, if, for example, you saying no more leverage, the emotional toll piece now. Like, I mean, I remember Giddy Steven, a couple months ago in the opposite direction. So, like, of course, these things like cut in both directions. But I do think that there is like a very solid, point here, and it's also just like a personality thing. Like, I don't use leverage, definitely not, for directionally long stuff. I do sometimes like, use it when I'm shorting something or going in delta neutral on something, or if I'm using a delta one pair, like leveraged staking ETH or BTC or something like that. So in those cases, I do use leverage, but not as a directional long for sure. And then there's like all of this like noise, which I always like find a little bit hard, which is one, there are traders in this space, and then there are people who are like kind of more on the investor side of things. And I think, they oftentimes talk past each other just like a ton, right? Like there are people who spend their day all day looking at these charts, coming up with like, theses of what's going on, and then jumping in and out of positions. And some people are very good at that, of course, but most people are not. Most people lose a lot of money doing that. And I just know for me personally, like I am not a trader. Like I tend to hold positions for quite a long time. Sometimes that definitely is very painful. And sometimes, like I give up gains that I should have like sold out of. But, over a long trend, like I'm still long this industry, and I do have like a longer view. And I've also been able at some points to like time things very well and like get out of positions. It's not like I'm holding these things to the bitter end and like marrying my bags, but I just know that like, the way someone like Groot, for example, as you mentioned, has different kind of like positions. He's got his like, day trading book. He's got his like longer term investment book, and I certainly fall kind of like on that longer term investment side. And like, I also, I think,
He exited.
No, I know he did exit that. I know, but I also tend to be a bit more diversified in terms of like, having BTC, ETH, Sol, and then I always keep like a pretty big stablecoin bag and kind of like not get at least too exposed. So, that's always been my approach. I do think this idea of just like closing inefficiencies is like super interesting.
This is to the next kind of question, which is like, is DeFi headed towards becoming TradFi on chain? Like, is that the end state? And if so, what does it mean for things without like any PE or intrinsic value? Overwhelmed trying to manage your crypto and DeFi investments? Try iYield, a free financial planning tool for crypto natives and yield farmers. iYield reveals your full financial picture by also supporting debts, incomes, and expenses in both crypto and fiat. iYield supports a growing list of over 16,000 tokens in 40 of the top DeFi and staking protocols across 17 blockchains, including Ethereum L2s. The best part is that it is 100% free, anonymous, and there are no ads. Check out iYield.com to take control of your financial future today.
Yeah, I mean, I think that we're going to see more and more of it. I mean, I do think that like there is this, like trustless nature of it that like will never quite, it'll never quite be the same as traditional finance. It seems like in a lot of ways we're like recreating traditional finance, but I think that there will, like you're showing Hyperliquid right now. This is like a perfect example of it. This is a unregistered exchange that does not like require KYC, and is incredibly popular because it's like providing the service that like a lot of people, need, wants, maybe can't access in other venues. And so I think, things like this will have a place in DeFi, I think, for a long time. Like this kind of like amazing area where people from across the world in all sorts of different places can kind of like come and like, interact. I think that's like honestly one of like the most interesting and kind of like ongoing interesting parts of DeFi. But I do think we will see the opposite side of this as well. I think we're going to start seeing more like permissioned pieces of DeFi, like permissioned L2s, where you have to KYC to go and use them, or a permissioned Uniswap V4 pool, where to trade, you need to go and KYC, or tokens that you have to like KYC for. So
then we'll just see a DeFi renaissance again. So maybe we need that. Maybe we need the man to come back in and ruin our DeFi so that we can build DeFi again and re-embrace the decentralized narrative. The reason why I was showing hype is because, Patrick, I don't know if you went into the hype guy over at the conference, but let me not dox who he was. There was a rumor that there is going to be a season 2. So hats off to anyone who was predicting that or anticipating that. And then 2, for the hype season 2, one of the best ways to qualify for it would be hype staking. Now, this may be obvious in hindsight, but a lot of people didn't realize this or would not have been thinking about this. So one of the strategies that I had been thinking of as I was like eagerly trying to fantasize about what I would do once I exited my longs was a, delta neutral short hype on Hyperliquid. So you're getting volume, you're getting like, open interest on Hyperliquid. Maybe there's some ephemeral points that are on the back end, and then stake hype, right? So stake hype long, short hype there, maybe 2x leverage. I don't know, kind of crazy for this volatile asset, maybe 1x leverage. You're probably only going to be running, a few percents, maybe double digits on a good day if the market turns around. But who knows? Maybe Hyperliquid season 2 is going to be 50% of the FTV or market cap, whatever. Unlikely, but it's something. So.
Well, they're also going to have the whole, hype EVM is coming out. I think it's already, like launched and it's like growing. We're seeing more and more protocols. So like, it seems like the long side of that trade where you have your stake type, you could do liquid stake type, LP that somewhere, or even leverage stake it somewhere. I think there's already at least 3 different LSTs for it. We're going to start seeing money markets. There's going to be DEXs. And so, like that's the classic thing in DeFi is like you can kind of take one of these ideas and there's all sorts of interesting ways to execute, especially like the long side of the trade.
What do you think, Patrick?
I didn't meet the hype guy there. Aren't the hype founders doxxed?
Maybe.
Like they do interviews sometimes.
Oh, then
I think they're doxxed. Yeah.
Yeah.
Yeah. Well, it wasn't a founder. He was there. Well, let me not say his role either.
Okay. So you met someone from hype.
Yeah.
Affiliated with hype or Hyperliquid or Hyper Foundation or something. And they're saying that there might be a season 2, which we're now talking about podcasts. No, that's great. I use Hyperliquid all the time. I hope there is. I hope the there was like an impenetrable buy wall at $20 forever, and that seems to have broken now. I wouldn't mind hype going lower because that's one of the few alts on my accumulation list right now.
What is your thesis there? Is it just like it's going to become the de facto DEX of DeFi?
My thesis is that even after Hyperliquid growing significantly, the proportion of perps trading that happens on chain on dexes it varies, but like 7 to 10%. So my thesis is that that gap closes eventually. And so even if total crypto perp trading went down, and I don't actually think it will in a mid to long term, then on-chain perp dexes I think gain traction, and Hyperliquid is the leading one by far. And then you also have Hyper EVM, and Hyperliquid has done a good job of bootstrapping the value of the network to their perp dex, and so I think that DeFi ecosystem will have some success, and that will help improve the positive flywheel for Hyperliquid.
I've been less certain about that. I mean, I am excited about Hyper EVM. I think that it might be like the next Parachain or next Sonic. There'll be a farming season. Who knows if they wanted to like do a big incentives package for all the stuff over there. But I don't understand why a perp dex needs an entire DeFi ecosystem, or like what the flywheel is, or what the value add might be for any of the involved actors.
I'm kind of similar minds. You know, like I think Hyperliquid in its current form is, I think, hands down like the best place to trade, like, you know, perp dex, on-chain perp dex right now. But like some of the changes that they're in the process of making, I think, you know, I potentially see as being, you know, having the opportunity of like tipping over the apple cart instead of rather than like reinforcing it. So the first one is like they're decentralizing it, right? And we've seen this happen with DYDX. DYDX last cycle was like the hot place to trade. You know, the V3 of their protocol was super used, super well liked. They had a massive airdrop similar to Hype. And then they, you know, started tweaking the things, started changing things, turned it from being kind of more of a centralized platform to being, you know, decentralized and having a full validator set, similar to what Hyperliquid's talking about doing. And it made it a much worse, you know, like user experience for traders. So that's the first one. And then two, I'm kind of on the same camp as Steven in terms of like, I don't think everything needs a chain, right? And like, you know, maybe they'll be able to do some cool stuff like tokenize HLP, and maybe that will like, you know, similar to like JLP on Solana, lead to activity where people are like leveraging that up and it makes the markets more liquid. But I don't know, it doesn't feel like Hyperliquid, you know, needs to go into the like, you know, DeFi ecosystem vertical, or like really there's a lot of like value necessarily for them to do that. But
let's talk about Baby, who is no longer doing very well. JLP, right? You mentioned JLP. It's former success, right? The formerly successful asset known as JLP. I have Kit. It's done pretty well versus Solana, which I think is good. It's like one of the reasons why I liked it is if you wanted to invest in Solana, JLP seemed like the more investable asset, all things considered. A long time ago, you know, many years in DeFi, a couple weeks ago in real time, I was mentioning that like you could go onto RateX and like long this yield, which I had anticipated would be over, you know, 30% or maybe even over 40% over a sufficient enough time given historical, you know, yield. And then like almost perfectly aligned with when I said that, volatility died and the yield went under that. But recently, because of the crazy chop and market conditions, we have popped back over. So I don't know if you guys know how to read this, but ON means overnight. So the overnight APR of JLP, 70%. This last 7 days, we've been averaging 54%, 1 month, 33. So we're obviously like pushing that average up, not pulling it down. And then 1 year, 37%. So anyone who had white knuckled those YTs until now should now start being in the green there. So congratulations, you, if that is you, for doing that. But it certainly was a ride, and my timing could not have been worse. But it looks like the thesis finally is maybe coming into fruition. Of course, now that I said it, I'll have jinxed it. But there you go. So volatility.
Steven, why if like the implied yield here is 28% and overnight it was 70 and the 7 days 54, why does that not make it a good arbitrage to kind of buy up the YTs now, push up that implied yield closer to what seems like the actual rates are yielding?
You know, the IY is the assumed average APY over the next 116 days. So if the market says over the next 116 days, it is likely that the IY will average around 28.2%. So like today, maybe 70%. Past 7 days, 54%. That's still twice, well, almost twice as much as the current IY. 1 month, 33%, getting pretty close to that IY. And then 1 year, 37%, still above that. So I still think the IY is low, but certainly if we are going into like a more deadish, crabbish, like, or just bearish period where everyone is just selling frantically and even like people are less excited to be hedging or running shorts, we could see volatility die. We certainly saw it with other protocols. So GMX did do good on like the immediacy of the bear market. So yeah, I mean, your short answer, I do think there is an inefficiency. I do think this implied yield is probably below where the actual yield is going to be, but that's, you know, one of the things you get from a fixed rate, fixed date. You like to lock that in. And as a reminder, the way this works, guys, if you are doing the YT, like if you are interested in purchasing the YTs because you think this is underpriced, is every week the actual yield from JLP pays down your debt obligation on your YT, and that can go positive, and then you're just literally sitting on a free position. And you can do this with leverage, but you know, leverage is scary, so don't go crazy with it. I was just pointing out that like we are finally sort of realizing that thesis that I felt sort of bad about previously, and now I'm happy that I wasn't completely wrong on that.
Yeah, makes sense. Well, what's even so you mentioned this like delta neutral hyper strategy. You know, if you do switch to being delta neutral, what is going to be your target APR? Like, do you have a number in mind? What you think is achievable?
I think so. Last cycle, delta neutrality was really the only game in town because stablecoins were all dead and we didn't know treasury bills would ever come online. And then they did, right? And now we have every manner of RWA, T-bill, et cetera, et cetera. I think some of these stablecoins will explode in glorious fashion. Some of them will survive, and some of them will become mainstays of DeFi. As a result, I am targeting 8 to 12 as like a reasonable rate that most people will be able to get with sufficient effort in a risk-adjusted way on stablecoins. I think that's going to be my bear market goal, 8 to 12. And in the current term, I'm saying 20% should be the minimum that you're going for stables.
Yeah, that seems about right. I mean, you know, there's even still on Barachain, what is it? The PayPal Boyko thing, whatever it's called.
USD. Are you doing
BYUSD
infrared?
That's still over 20%. And I think it's supporting, if you go and look at like BEX, you know, on here, I think they've got 300 million, but if you look at like the full amount that's on here, a little over 20%. Yeah. And there's $300 million in here. And I think if you look at the actual like BEX, so like the DEX that's doing this, it's like 400 million or something like that. So, you know, there are people who are still farming stables above 20%, you know, at size, which is, it's, you know, even in such challenging times, it's great to see.
Well, there's also Dolomite. So like, I don't know if the points narrative is going to die. I know we've sort of been celebrating the death of the points narrative for the past year at this point, and it's not gone away. We just have more people creating new points narratives. But so like one of the ones that people have been looking at is like SUSDE, right? We've done a little bit of you know, funny math here. My estimate is that the value of 5 points per day or 5 sats, when you know, their points per day per dollar, is roughly 1% additional added. So let's just say you have a 9% implied yield on SUSD, 8 of which is real, 8 of which is like actual yield from the underlying basis trade. You can borrow a stablecoin at 2.5 or 2.16%, or, you know, really low if you go for some exotic stablecoins to short. You're going to be running a plus 20% strategy on that. And, you know, that's even before the points. Then after the points, it could be plus 30% strategy. So I think, you know, there's a bunch of things to do with these RWA stables that people are either sleeping on or not realizing, or like they're still so caught up in their longs, they haven't made the transition yet. And if you are early to making the transition to a neutral or stablecoin heavy portfolio, then you get to benefit by all of the inefficiencies that still exist in stablecoins. That's sort of where I'm at. And I know it's crazy. The bigger the LP that we know, like, you know, if they're a 7-figure portfolio or an 8-figure portfolio, the more likely they are to be either entirely neutral or like 95% neutral.
Yeah. I mean, it's a lot of like going from kind of like capital creation to capital preservation, right?
Yeah.
Like if you have such a large portfolio, like, you know, making sure you are not affected by exploits, depegs, rugs, whatever it is, and you're maintaining that, and you're generating whatever their target yield is.
Stablecoin yields. You're not going to like change it, like have a class hop off of stablecoins.
Right. Whereas, you know, Patrick can tell you in the like Solana, you know, Russian roulettes of meme coins, there were certainly, you know, people that moved classes from, you know,
from being millionized to now destitute.
Yeah, exactly. Exactly. So yeah, what do you think?
Your brain. You had a post saying that all of the cleverest people that you know are considering. I don't know if this was copy pasta because it sounded like it.
Many, not all. Someone posted something similar. I don't remember who in 2022. I think it was Grit posted it, but yeah. So I didn't say all. I said many of the smartest people I've met in crypto, and it's true. And you know, a lot of people, interestingly, I said make of it what you will, because you could say that's a bottom signal.
Right.
I don't think it is. I mean, I think it's a bottom signal. I don't think it's the bottom, but you know, so it's like, oh, well, you should be happy about that. If that's
what was the actual tweet? You said many of
the smartest people I've met in crypto are actively looking for ways to pivot to other industries, which is true. But the other thing that people misinterpreted, they're like, oh yeah, like that's good. We need to get the tourists out. Some of the people I'm talking about, I'm not going to name people because privacy, are, for example, like, you know, they've been a dev in the space since pre-2019. Like, you know, that's not a tourist. That's someone who spent more than half a decade of their life building stuff in the space. And they're kind of saying, like, F this after the events of recently. The other thing to consider is, in some cases, you know, and this is just, I'm just trying to share, you know, what I'm hearing, right? I didn't actually expect it to get that much traction, but
yeah, Mark Zeller commenting, man.
What's that?
I said, yeah, Mark Zeller commenting.
I've talked to Mark sometimes.
Yeah.
Rarely. I like Mark, but yeah, I mean, so it's funny. I think Mark Zeller's post is funny because he's like, to me, I was obviously on the right curve. I know plenty of smart people that are sticking around too, but you know, I do think that there's some people who have built things in the industry and then they're disillusioned or jaded with the lack of progress on real applications. I know we have not, I don't know if we will talk about ETH Denver. That was a common sentiment I heard there, actually. So several of these people I talked to were at ETH Denver, you know, as either a founder or with a company. And then after the conference, they were like, they were telling me how disappointed they were with like how many real applications were being built, where so much of it is like the same kind of DeFi games that we've been seeing for the past 5 years. And it's like, when is someone going to build something that's really useful?
See, it's if I'm crazy, but I disagree. And maybe it's just my perception of last cycle. So last cycle, what were the DeFi games that were the biggest? I mean, there were like Ponzi's, there were food farms, there was the liquidity bootstrapping of the entire ecosystem. I think that was the game, right? Everyone was bootstrapping liquidity. Maybe you guys disagree, and then we sort of got into leverage. There was the capacity to leverage because liquidity had been built up. So people were leveraging the staking yields. And so we had networks being built, we had liquidity being built, and everything else was kind of vaporware to some extent. We had a few things sort of pop up here and there, but this cycle we've onboarded the real world asset class. So now we have robust perp dexes that are on chain like Hyperliquid. We have any number of tokenized T-bills, which we thought we would never have last cycle, and now we do have them. We have some other tokenized like real world yields, whether it be real estate or small businesses or CDOs or whatever else. All of these things are financial structured products that are now here. I think that's a huge innovation. It may not be like a world changing innovation. We're not solving world hunger. We're not like building the next sort of piece of tech that might innovate X, Y, or Z, but we are bringing on chain what has historically only been accessible via TradFi rails. And to me, that's huge because DeFi is decentralized, it's permissionless to some extent. And so now anyone, anywhere in the world with access to the internet can participate with or can play with these highly advanced, sophisticated financial instruments. And to me, that's always been like the goal of DeFi. It hasn't been to change the world with like a piece of tech. It's been to make accessible the most sophisticated financial instruments that exist.
Yeah. So our RWA growth has been a huge positive point. I mean, if you put some numbers to that, if you go back 3 years, it was around $120 million in RWAs. Now it's over 9 billion. So that's, insane growth. However, that's not most of DeFi. DeFi has, depending how you count it, tens to $100 billion plus in deposits. The vast majority of that is still incentivized yield-based protocols, which, I mean, you could argue you're building infrastructure for RWAs, but I think it's fair for people to start to question, like, when is it going to happen? I do think it's going to happen in the next few years, but you can imagine how I think it'll happen over the next 5 years. Like more RWAs will come on chain, and then all of the good infrastructure projects like Aave, like Pendle, like Uniswap will be those rails will be repurposed for RWAs and stablecoins and things like that.
Exactly.
But I think you can imagine the sentiment from some people who have been building for 6 years that are like, all right, like, when is when is this stuff going to arrive?
Well, I mean, we went from effectively 0% RWAs, less than a billion, so less than 1%, to now, what did you say, $100 billion in DeFi proper?
Depending on how you count it.
Let's count it that way. Let's just say 8%. So that's a massive explosion, I think, to go from nothing to 8% of the market. And I would say probably most of that growth has happened in the past year, maybe the past 2 years.
Well, one thing I would say, I mean, I still don't quite understand why RWAs are so useful. Like, I can understand stablecoins, right? People transacting, people there's all sorts of stuff.
Traditionally non-composable or very difficultly composable yields now being made composable and accessible.
Well, to me, it's more like there's a lot of protocols launching and they all have points and they're all going to have a token, and I want to go farm those so I can get exposure to the points, the additional yield, the not real yield, the bonus, like the DeFi Ponzonomic, money games part of it. Like, that's the part that I really want to participate in. And like, I would imagine that's probably true for you, Steven. Like, I don't think you really are sitting around like being like, ooh, let me get that 3-4% on stablecoin yield. It's like the extra juice that having a token can lay on top of it that really makes it interesting. And so, we're on season whatever of some of these different protocols that have had success, like Ethereum, EtherFi, not in RWAs, but in a different sense, are on their season 5. Like, I do wonder how long these protocols can kind of stretch on these incentive programs, and like, if what happens when like the extra juice stops, how interesting are these products really when?
Yeah.
Good.
My response is that they'll become competitive. So right now, all of them are relying on points. Points meta may exist for more years than we think. We anticipate that it will. It may die immediately. It could die tomorrow. Who knows? But there is still some underlying yield there, and I think the underlying yields will become more competitive and more sophisticated. So we've already seen Resolve messing with senior junior tranche mechanisms. I think this is the first time that I've seen senior junior tranche mechanisms on a RWA stablecoin. That's been pretty cool. We're seeing Infinify come here with a very similar mechanism, which is going to allow what I effectively would call their junior tranche to get probably somewhere around like a 22% yield on that. Now, it is highly based off of this same similar narrative that's pre-points. So what I anticipate will happen is that we will build all of the most interesting things that TradFi has built and that large hedge funds like to invest in, but it will be slightly more efficient and definitely faster, and it will also be permissionless. So at the very least, once all the inefficiencies have been closed, people who want to hedge against inflation, people who want to hedge their dollars or go play with interesting instruments will be able to do that permissionlessly. Now, is that an actual boon? I don't know. Is the ability to gatekeep the value one of the best things about TradFi for large institutions? Probably it is. But I agree with you in the fact that most of the premium on the underlying real world asset yield is points. In fact, all of it is. But I disagree that when that premium goes away, these become so uninteresting that they're not still going to see major adoption.
Yeah, I think it's the question of who, right? I think that there may be adoption that pushes people who interact in traditional finance, on chain because there's some advantage of doing it. I think
$100 billion, man.
The yield farmers like ourselves will probably have moved on to something else, and it will not be interesting. I also think that if we are going to see,
so let's say,
yeah, but there's
reserves, right? Well, last cycle, what were we farming during the?
We're going to be doing
farming funding rates.
We're going to be doing quadruple restaked derivatives on the L4s of Hyperliquid. Who knows, man? There's always something new to go on a farm. But my point is, if we really do see these institutions coming on chain and actually doing stuff at scale with, for example, RWAs, it's going to be on permission chains. It's going to be a very different version of DeFi than we see today. And the simple reason for that is the Bybit hack that we saw a week ago, right? People are not going to interact on situations where they can go and lose $1.5 billion by being tricked by North Korea to sign the wrong thing. So the way you get around that is you're on a permissioned, walled garden ecosystem where there is a gatekeeper who can say who can come in and out. And so if you're inside the walled garden, you can transact, you can swap, you can leverage, you can do all these things.
It has to be off
but
chain.
No, I mean, like, it's the same way that they have, you know, like custodians, right? Like Fireblocks could start their own chain, or JP Morgan's could start their own chain. And like the part that is slow and takes time is to get out of the ecosystem. Like that could be the big blocker. And then once you're in the ecosystem, you know, everyone's just kind of like interacting and happy and can do what they want. But to get out of that ecosystem, you have to go into a video call, and you have to like go through a lot more of these kind of like, you know, traditional steps that are tied to KYC and protections. So, you know, I think that like if we really see that kind of adoption of RWAs by large scale institutions, it's going to have those kind of rails, because we've already seen what were considered to be some of the most like trusted and safe platforms for multi-sigs, like Safe, you know, be exploited and large losses happening. It's the same way I've heard like a lot of people who maybe want to have long-term exposure, something like Bitcoin or ETH, saying, hey, maybe those ETFs aren't that bad after all. You know, like I don't have to worry about the custody of this thing. So it's not my approach to it, but I do think that there is some, you know, risk premium that we all take, and we all, I think, discount probably more than we should, of like how easy it could be to wake up tomorrow and have made some mistake, made some permission, clicked on some PDF, done something wrong, and then have everything wiped out. You know, like we all take a lot of precautions, but it is a lot more precarious than, you know, having your credit card number stolen and going and calling the credit card company and having them, you know, pay you back or whatever. So
Fair enough. Fair enough. All right. Well, you know, guys, I know we didn't talk too much about yields, but there are a bunch of yields out there. If you are looking for yields, Euler is one that has they just got like another $160,000 grant from Sonic. This is like liquid S, by the way. So most of the yields over there fully liquid, which is a lot of fun. So look at max ROE, bunch of things, and port. So we got gems coming too. Those are going to add additional stuff to all of this. I think that these loops are probably some of the best out there, but please do be mindful of liquidity constraints. Whenever you're leveraging or looping, don't just think about entering, also think about exiting. And if you're entering through low liquidity automatically, you can get shredded to bits. So consider, if you are leveraging and looping when you're doing that, to do it manually, to like get your asset, go off chain, go to a different chain, like purchase whatever asset you need to loop and then bring it back on there. It's painful, but you will benefit in the long term. Just be mindful of liquidity is the end result. Don't just get blindsided by a really nice APR and auto leverage in. That's how you get shredded. That we'll end it there. Thanks, guys. I think there was a bit of hopium in there. You know, outlooks. I don't think this is the end.
Yeah, let's not all be doom and gloom. You know, there's
exactly right.
some. I will say I am impressed with some of the stablecoin projects I interact with, and I don't just mean issuing stablecoins, but like using stablecoins to build. You know, much of the world does not have credit cards, does not have access to financial services potentially at all. And I met some projects in Denver that are building like payroll services for that, building other financial services using stablecoins. And that is cool. That is a way that crypto actually can make the world a better place.
Doesn't DeFi Llama have Llama Pay? Isn't that one way you can use like stables to pay people?
Yeah. How do you think I met all these projects?
I mean, it is cool. And I do think, I mean, we talked about this before. One of the main drivers of the dollar adoption has been Tether in, I don't know if you call them third world countries, but countries that have a hyperinflationary currency. But anyways, we'll end there. Thank you guys so much for watching, and have a wonderful rest of your